Welcome to the Treasury Update podcast presented by Strategic Treasurer, your source for interesting Treasury news, analysis, and insights in your car, at the gym, or wherever you decide to tune in. On this episode of the Go Strategic series, guest host Stephanie Villatoro interviews Melody Hart, Senior Consultant at Strategic Treasurer, on how to transform an administrative burden by taking a strategic view on compliance. Listen in as they explore a wide range of both existing and new compliance areas and how companies can better safeguard their assets.
Hi, I'm Stephanie Villatoro, and I am joined by Melody Hart, one of the senior consultants at Strategic Treasurer. Today, we will be covering compliance as our part 4 of this series. Welcome, Melody.
Thank you, Stephanie.
Melody, a lot has happened over the past few years in compliance. Can you tell us a little bit about just an overview of compliance in the past, 5 to 10 years?
Sure. A lot of these things have happened in response to things in the marketplace. So we had Sarbanes-Oxley come in, about 12 or 15 years ago. That was in response to issues at corporations. So they wanted to make sure that corporations were exercising diligence. And then you had Dodd-Frank 1 come into place. Around 2010, FBAR came in. Dodd-Frank 2 come in at a later time, and FATCA, which was attempting to make sure that about income tax evasion. Money market reform was a more recent one, SWIFT CSP, individual FBAR. So there's any number of things that have come into place, and there's many more that are going to come in the future, like Basel IV in 2020.
Yes, it is an ever-changing environment in compliance for the Treasury organizations. Can you give us just a brief overview of each of the different compliance areas?
Okay, well, one, you have FATCA. The U.S. government was concerned that individuals were attempting to avoid tax on their income or tax on the income of entities they owned. So they put in place FATCA to ensure there's not tax avoidance and on income paid to foreign accounts. The IRS is the enforcer, and companies are required to become withholding agents, essentially, on payments to individuals or their entities. So it affects any payment made to foreign accounts and even affects intercompany payments. So if they are withholdable, they're required to withhold 30%. So it's an attempt to make sure that U.S. taxpayers are actually paying their taxes, and if they hold a substantial ownership interest in an entity, that they're paying taxes on that as well. FBAR is from Financial Crimes Enforcement Network, also known as FinCEN, which is a bureau of Department of Treasury. The director from that reports to the Treasury Undersecretary for Terrorism, and their job is to gather information on financial transactions and analyze the data and disseminate it to other law enforcement agencies with which they coordinate. So they're a regulatory agency that functions under the Bank Account Secrecy Act of 1970. It's an attempt to enforce anti-money laundering and anti-terrorism. It applies not only to corporations, but to individuals, including individuals who are simply signers on a corporation's account. So this now requires actually mandatory electronic filing, which has made it a little bit more difficult for people. What you have to do is you have to basically report any foreign account on which you're a signer. Now, corporations have to do an FBAR. They have to make a report of all of their foreign accounts, and it has to give the highest balance and that type of thing. Unless they have a large number, then they don't have to get the highest balance. They have to maintain the information. But since individuals that work for the corporation, or maybe even used to work for the corporation, may be impacted, many corporations are actually doing the filing on behalf of these people because they don't really want to release their information on the company to individuals. So they'll actually do the filing, and it has to report what accounts that they are. Any U.S. citizen who is a signer, it has to report the accounts they're a signer on. So that would be FBAR. And then you have GDPR, which is General Data Protection Regulation. The objective is, it's an EU regulation, although it affects the UK as well. It intends to go along with it, even though they're going to exit the EU. It controls personal data of individual and essentially gives the control back to citizens and residents over their personal data. So there are strict requirements of the security and treatment of the data, and the regulation is meant to simplify the regulatory environment for international business by unifying the regulation within the EU. It has strict guidelines of encrypting and of making sure that there's not access to data when it's at rest or when it's moving. It regulates how the data is handled and affects any organization that does business in or with the EU regardless of where the location is. So you can be a U.S. company. If you're doing business with the UK or the EU and with individuals there, you have to follow this rule to protect the data. And an individual has the right to say, I want to be forgotten. And you have to be able to purge the data. And interestingly enough, most recently, California was putting in place a similar law, which is problematic if it's only one state, because it's hard to think of how to enforce that if it's just one state rather than across the whole country. But I think we'll see more of that as the time goes on as well. Basel III, that goes into effect in 2020. The goal is to further stabilize banking. Banks have to be able to withstand a 30-day system-wide shock, liquidity shock, and it tries to strengthen governance and transparency. The deleveraging of banks is thought to have contributed to the spread of the 2007 financial crisis, so Basel III is set up to ensure banks have the liquidity needed and are not overly leveraged. Another goal was, as I said, strengthening governance with added discipline and providing greater transparency to regulators and investors. So that is coming on, and how that affects us is as banks are regulated further, so as you have banks that are in the EU and they are subject to this, it'll affect their operations and how they operate with their customers as well. Another aspect is SWIFT CSP. This is not a regulation, but it is a requirement for those who use the SWIFT system. It's meant to defend against fraud. So times have changed, but there's a lot of fraud that's getting more and more complex. And as you might remember, there was the Bank of Bangladesh issue a few years ago, and that was a compromise of a system. So in SWIFT CSP, you have to secure your system, and all the way through. So it goes from one to the other, all the way through. The whole system must be secured. The intent is to secure particularly the endpoints. Because of what the Bangladesh incident taught us is that although SWIFT itself is secure and had not been breached, the SWIFT community is only as secure as its weakest endpoint. So the focus of CSP is to secure the endpoints, the companies that use SWIFT. This means your organization and your counterparties will have to self-attest and comply with the controls. It's got 3 objectives and 8 principles and 27 controls. You have to secure your environment, you have to know and limit access, you have to detect and respond to breaches. So that's SWIFT CSP in a nutshell. So I think those are the primary ones. There's also KYC, which affects companies because it's a regulation for banks, but we as companies have to suffer the consequences of that by making sure we get all the information and data that they need in order to work with us.
Thank you, Melody. So no matter what you're looking at from a compliance standpoint, whether it's a direct compliance requirement for a corporation or a company, or it's a bank-related compliance requirement, all of them have either direct or indirect impacts to an organization across the board. Given that, of those different compliance areas, what do you think is the biggest headache for a company or an organization to keep abreast and keep apprised and knowing, I guess, more paperwork? So what's the biggest headache for a company?
I think for most companies, the biggest headache is KYC. I think FBAR and GDP come in close after that, but I think KYC is the biggest issue because you have to keep doing it all over again and over again with banks and any financial institution that you deal with. It's very cumbersome, very administrative. And you see this when you're trying to open bank accounts. I remember early in my career, you'd call the bank up and say, open an account, and they'd open it. Now, it's not just just asking to open it. There's all kinds of documentation that they have to request from you, some of which you may not be all that willing to give, but they request from you, and you need to comply in order to get an account open. It can take months, particularly with international accounts, to open an account. So it's not a quick process. So that's why I think it's a headache. FBAR is just a headache because it involves tracking bank accounts and the signers on them. And that's always been problematic at companies. Not everyone has focused on bank account management, as a discipline. But it has become where it needs to be a discipline in order to get the information and maintain it properly. And GDPR, well, that's a problem because you have different laws in different countries, but these laws in the EU and the UK are forcing compliance elsewhere, and it means a lot more diligence. It would actually be easier if all countries had the same regulation of that, because then everyone would have to comply and everyone would have the systems in place. It's not easy to put these systems in place.
It almost seems like you just pick the most stringent and apply it across the board, but I know that would be difficult as well. If you took Europe's GDP law and applied it to an organization across the board in the U.S. and Canada or South America, that would be a challenge. But it might make it easier if you just had one. I see your point on that. So, given all of this information you provided us just on compliance, an overview of each one, what's the headaches that are out there? How our series is on being strategic. So how would companies or organizations look at these different areas of compliance strategically?
I think for companies, it's hard to think of that strategically because most of this is administrative. You have a lot of administrative in order to accomplish all the things in these regulations and requirements. So I think the first thing you have to begin is to step back from it. Step back from the administration and look at the goals of the company. Where is it you want your treasury focused? And more we see that companies, CFOs are wanting their treasuries to be more strategic, to focus on value add and less on the day-to-day. Now, you have to have day-to-day, obviously, in treasury to get your cash position, etc., but they're wanting you to focus on things more strategically, which means automating, for one, and less administration. So the trend is to reduce administration, automate, look at the amount of effort that it takes to accomplish each of these different things, and then think about the effort and the cost and whether that is where you want to focus your time. If not, you need to think of alternatives of how you could handle this without the same amount of effort that you're expending now. I mean, if you're sitting there with spreadsheets for FBAR, you've got a lot of administration going on.
You talked a lot about, administrative tasks and things that were manual. Or are there other methods to handle some of these less value-added tasks that are out there?
Yes, and that should be part of looking at it strategically, is that you need to look at, okay, what would I do if I put technology in place, BAM system or TMS system, would that reduce the administration and reduce the cost and allow us to move forward? And would it solve the problem? Because sometimes, you have technology, maybe it pulls the information, but it might not actually complete the compliance step. But, it still might be a good step to have the technology. Or maybe there are things that can actually completely remove a portion of that. I mean, GDPR would be an example. If you put in place the technology, you probably helped to solve that problem. FBAR, maybe not. Maybe you need a little extra something to, you can gather the information, but that's not quite enough. You can also outsource. You can always look at outsourcing some of these. I've seen a number of things outsourced before, and that can work well. Or is there somebody in the company that you think is better suited for a particular piece of this FBAR that's more administrative? It's looking at all the options and then determining what makes the most sense for your company.
And that may have to do with, the size of an organization, how much resources you have internally. Do you need to look for more outsourcing versus, keeping it in-house? So I can see that. It does depend on the size of the organization as well as what different compliance areas are applicable to them. So what about the future? Do you see anything increasing or decreasing in regulation, just to give a little more bandwidth around, not just what's today, but what's coming in the future?
I would say you can always expect there to be changes in regulations and requirements because, one, you have administration changes. Some administrations want more regulations, some want less, but additionally, there are reactions to marketplace. We had a financial crisis that resulted in some increased regulation. That's not going to be our last financial crisis. There's always going to be one. There has been in the past. Things will happen to address it depending on what created that. There might be more increased different types of fraud that might increase regulation. There's all kinds of things that can increase the regulation. I think it's a very good possibility. We'll see that going forward. And if you look at GDPR, California is the first state we're looking at that type of regulation. There could be more in the future. And many times with these things, corporations have been caught by surprise by regulation, particularly ones where it's a bank regulation and they aren't realizing it's going to affect them, but also in ones that do affect them. So many were surprised by FBAR. In fact, even after FBAR went in place, many companies had not even done FBAR and were having to file years into the past just to catch up. When Dodd-Frank went in, of course, that's mostly been repealed, it was mostly a regulation for banks on derivatives, but all of a sudden companies were caught by surprise. GDPR, that's more directly to companies, but it still caught people by surprise. And no CFO wants a surprise. So one of the parts of being strategic is get out in front of it. So first you need to assign an individual. Don't just let everyone say, we should keep our eye out for regulation changes. No, assign an individual or individuals to monitor regulations or types of regulations and be able to opine on them and their impact and keeping an ear to the ground for possible upcoming regulations. Then they can meet with Treasury, with others in Treasury, and develop a plan for dealing with it prior to it going into effect. And this also helps because many regulations have a public comment period, and you'll want to be part of that comment period. So it's important to know it ahead of time.
Okay, so for new regulations, overall, a company should assign someone that's looking for new regulations on the horizon, and that individual should work with other Treasury people that's going to impact in the organization, and it may be outside of Treasury, so the organization overall, and develop a plan, making sure you're part of the comment period to provide feedback to whoever the regulatory authority might be before it comes into action, and you're required to do that. So thank you for your time, but do you have, Melody, any final thoughts about regulations overall, or compliance regulations overall, and for the treasurer to be more strategic going forward in the marketplace?
Yeah, I think we have to quit looking at these as administrative burdens and look at it more strategically as to how do we get out in front of it? What is the effort to comply, and can we find a way to comply more efficiently? We need to take responsibility for these compliance issues by taking responsibility for them ahead of time and making sure that we're ahead of it and provide our company with the good advice and the planning to make sure that they can comply when a regulation goes into effect.
Well, thank you for your time today, Melody. We appreciate your expertise in this area of compliance and enlightening everyone on listening to the podcast series. Please join us on our next episode 5 with Secure Treasury, where Craig and Alexa will be joining us on the Treasury Update podcast. Thank you.
You've reached the end of another episode of the Treasury Update podcast. Be sure to follow Strategic Treasurer on LinkedIn. Just search for Strategic Treasurer. This podcast is provided for informational purposes only, and statements made by Strategic Treasurer LLC on this podcast are not intended as legal, business, consulting, or tax advice. For more information, visit and bookmark strategictreasurer.com.